right then. Good morning, trade pros. Welcome to our morning market update for Monday, June 25th of 2018. In today's morning market update, we're going to talk about talking about things, and primarily stock index futures starting the week in the red, and I'll explain why. China's central bank reaction to some of these trade wars, and OPEC and non-OPEC members talking now about a 2019 production cut agreement, or an agreement into 2019 of sorts. We don't know if it's a production cut yet or what it'll be, but they're talking about things, sort of like I just did. All right, that's on the morning market update. That's kind of what we got scheduled. Let's get out our passports, take a trip around the world. Japan's down 0.8% this morning. Hong Kong's down 1.3%. China's up 1.1% on these capital inflows, and we're going to talk about why in just a moment. In addition, India's down 0.6%. In Europe, at midday, European stocks are getting hammered. London's down 1.1%. Paris is down 0.9%. Frankfurt in Germany is down 1.5%. After some talks this week out of Europe passed, and the Italian prime minister said the following. He basically said, look, we need to blow up this entire migration policy in Europe and start fresh, which basically means goodbye, Angela Merkel. So after this weekend's meetings, it looks like Merkel's job is less than secured. The fate of her term is up in the air, and that's really affecting the DAX and markets in the German economy. So that's why they're getting hit. And Frankfurt's down 1.5%. That's a pretty big slide. Futures in the United States, Dow Jones is down 0.8%. S&P's down 0.7. NASDAQ down a whole round one, down 1 percentage point. And equities are sliding, all right? There's a lot of bearish news. I think we're going to take out some of last week's lows. This is a chance to do it. And overnight weakness to the downside. We're going to have on the open our very typical head fake in the opposite direction. So we're going to try to build some kind of rally momentum, and then I think it's going to fail, and that's a really high opportunity, high probability, low risk opportunity to start shorting into that rally early on today. So this morning I'll be shorting rallies to start today, and then I'll allow the market to convince me otherwise to start buying dips as we transition to the bullish side, if we transition to the bullish side. If we just get rocked off the open, great. I'm going to be selling rallies, so that's going to be helpful to me. It'll make my job super easy. It's not always easy, but it'll make it easy if the idea you go with ends up working out. All right, crude oil is up 0.4%. OPEC meeting and non-OPEC meeting pretty much was less bearish than anticipated. They factored in the production cuts. We talked about this at Market Analysis Live last night. And all in all, it took a bullish effect on oil. And most importantly, I'll read the notes on crude right now. According to Russia's energy minister, he said that OPEC and non-OPEC members are already considering an output deal for 2019. So when they met this month, we were kind of afraid of the fact that they're increasing their quota already 6 months into the deal. And now, in order to sort of show face and save face, they're saying, oh, we're going to have something going for 2019 as well. So they're like, oh, well, you know, we might be temporarily increasing it, but we're committed to working together for the long term. So that balances it out with a slight increase of output, with the potential to have a 2019 regulation as well out of the OPEC cartel and non-OPEC members. And that's bullish. There's no other way to look at this but bullish. Oil's back to the bullish side. I think there's opportunity to buy dips up until we get to about, where was that level? 78s, I think. Hold on one second. I got to turn around and look at it for you. Not 78, 70. Come on, guys. Anyone say something? 70. 70 is really strong resistance overhead. Once we tag that, we'll probably see some sell side, at least temporarily. That's what I'm expecting. All right, that's oil. That's OPEC. Alexander Novak also said that with the view to sign at the ministerial meeting at the end of this year. So the next meeting in December out of OPEC is when they're expecting to see an extension for this oil production cut. It's going to get very volatile. All right, moving on to gold. Gold prices are more or less flat. Bitcoin is up 0.5%, but trading to the lower range of 6,000, 6,178. If Bitcoin breaks that 6,000, look out below. We're going to 4,500 very swiftly. I think the next move, the next 1,000 points on Bitcoin is to the downside. And that's what the market is showing. That's not my opinion. All right. 10-year Treasury yield down 2 basis points at 2.87. Today we have new home sales at the top of the hour, 10 a.m. Dallas Fed manufacturing survey at the bottom of the hour, 10:30, and that's pretty much the two economic events. Neither of them is gonna be kind of a game changer for the economy, but they can cause some volatility around the release times if they miss or deviate from their expected numbers, from their expected numbers. All right, so let's talk about why this stock market stinks to start the week. Donald Trump on the weekend expanded his tariffs against China. It was just tariffs on imported goods, which was one area of it. But now he's opening up this trade war, and it is officially a trade war. I hate to break it to you guys, but it's been a trade war. And he's adding a second dimension to it by saying the following. He would block companies with at least 25% Chinese ownership from buying companies involved in industrially significant technology. So Donald Trump is trying to block companies with 25% or more Chinese ownership of acquiring technology. And that's one of the aspects that he's unsatisfied with. He said China steals their technology and monetizes it in their market, rather than the United States building technology, monetizing in their market, and paying some of the money to do that. So the interesting part here is that is a whole separate thing that has never been discussed. And the market saw that and said, holy crap, this is a whole new fear that we've never really priced in yet. So it's natural for this market to drop. You can't expect this market to be anywhere than where it is right now, because it's just taking this new news and pricing and factored into the price of where the S&P 500 is and other key markets. And then in a response to that, I'll tell you guys what China did, because this is interesting. They unlocked 700 billion won, or $108 billion of liquidity. Chinese central bank did. And what they did is they trimmed the reserve required ratio for banks in China. So what that means is, imagine being a bank with $100 million requirement to be held in your safety deposit box, or not. It's not held in a box per se. It's held electronically, but you have to have $100 million, let's say, in storage. You got to hold this in order to make all your loans and run your whole business around it. And the central bank suddenly says, all right, banks, forget that 100 billion. We only need 80 billion. What it's done is it's unlocked $20 billion of extra capital that you were initially holding to circulate into the economy. And that's going to create traction. It's going to cause economic growth. That's the hope of China's central bank. So they've done that. They trimmed the reserve ratio for some of the banks, and they're aiming to support small and micro companies within Russia to offset some of these tariffs. Not Russia, it's in China, to offset some of these tariffs that are imposed by the United States on them. All right, so they're saying, you know what, these tariffs are going to hurt us on an economic front. So let's just do something on our end. What do we have control of that we could stimulate our economy with? And that's what they're doing. So here we are. It's a Monday. It's going to be a great week ahead of us. And we're starting the week on uncertainty, and that's uncertainties around these trade wars. We have new news being priced in, new ways of fighting a trade war, and there's going to be new opportunities. So I think this week, downside is the right side. As the U.S. session opens, you're going to see institutional money repositioning their portfolios by getting out of equity to reprice this new risk, getting into things like bonds, gold, and other safe haven assets, Japanese yen. So look out for that. You guys have yourself a great trading day. Manage your risk. Trade like a TRADEPRO. And be sure to tune in tomorrow. We're back at 9 a.m. For now, we got to turn around, open up our trading room with our subscribers, and we're going to day trade live. Another successful day. Another day in the dream life. See you guys there. All the best. I'll see you tomorrow morning at 9 a.m. All the best, and manage that risk. Trade like a TRADEPRO. Catch you guys tomorrow. Goodbye. Oh, my monitors went dark. That's good. That means the workday's done. The workday's just getting started, guys. It ain't done yet. We got to make some money. Vic, I don't know what you were Googling that whole time, but your monitor was showing in the broadcast, so hopefully it wasn't any. Look. It wasn't any like streaming video content. Look. Bye, guys. Bye, YouTube. Not